Last week, we had a ton of views on my video on the top 3 highest yielding REITs. And since you guys seem to like it,
I like it a lot.
I figured this week we would do something similar with the top 3 highest yielding MLPs. Hi, everyone. I'm Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market. And if you missed last week's video on the REITs, you can always check out our YouTube page. Just go to Wealthy Retirement on YouTube, or even better, subscribe so you never miss another video. All right. Before I get into the top 3 highest yielding MLPs in the market today, I want to very briefly explain what an MLP is. An MLP is a master limited partnership, and it's very different than just a regular stock. For starters, they pay distributions, not dividends, and there are some key differences. So when you get paid a distribution from an MLP, it is usually a return of capital. And what that means is when you get the distribution, it is tax deferred. You don't pay taxes on it in the year you receive it. Instead, it lowers your cost basis, and you'll pay a higher capital gains tax when you eventually sell it. So here's what I mean. Let's say you buy a stock for $20 and you get a $1 per share distribution. So again, you don't pay tax on that distribution in the year you receive it, but it lowers your cost basis by $1 to $19. A year later, you go to sell the stock at $22. Now you'll pay tax on a $3 capital gain instead of $2 because that $1 lowered your cost basis. Now, additionally, the tax statement you receive at the end of the year from an MLP is called a K-1. It's not a 1099 DIV like you get from a regular stock. And these K-1s can be a bit of a pain in the neck. They are often late and they are frequently corrected. So as a result, your tax preparer may charge you extra for handling K-1s. Now, that being said, I do think that MLPs are worth the hassle of the K-1s because the yields are often higher and again, they are tax deferred. Lastly, most MLPs are often in the oil and gas industry. So even though they have great yields, you don't want to chase too many MLPs and get overexposed to one sector. All right, so that's what MLPs are. Now let's talk about the 3 highest yielding MLPs in the market today. The first one, the highest yielding one, is USAC Compression Partners, ticker symbol USAC. It yields a giant 13.3%. Now it provides compression services for oil and gas pipelines. Its distribution to shareholders has been very stable. It's paid 52.25 cents per quarter since 2016 and a smaller dividend in the 3 years prior. Now, MLPs report distributable cash flow, or DCF. Now, this is what we look for when we're analyzing whether an MLP can pay or afford its distribution. In the first quarter, USA Compression's DCF was $52.6 million. It paid $50.9 million in distributions for a coverage ratio of 1.03. In other words, for every dollar it paid shareholders, it generated $1.03 in cash flow, and that's a little tight for my liking. For the full year in 2020, last year, USA Compression's DCF was $220.8 million, while it paid out $203.5 million for a coverage ratio of 1.09. So that's a little bit better. Now here's where it gets interesting. For the full year 2021, management has said it expects DCF to be in a range between $193 million and $213 million. Now, it will likely pay out that same $203.5 million in distributions for the full year. So as long as DCF comes in above that $203.5 million, everything's hunky-dory. But if DCF comes in at the low end of the range, like around $193 million, no bueno. The company will not be able to afford its distribution. Now, that doesn't mean that a cut is automatically coming, but as an investor, it would make me uncomfortable to be invested in a stock where the company cannot afford its distribution that it's paying to shareholders. All right, up next is Shell Midstream Partners, ticker symbol SHLX, and it's got a whopping 12.4% yield. This is a Houston-based oil pipeline company paying investors 46 cents per share quarterly. It has raised the distribution every year since 2015. In the first quarter, Shell Midstream's distribution coverage ratio was 1.1. Again, that means for every dollar it paid investors, it generated $1.10 in cash flow. For the full year last year, the numbers weren't as strong. The coverage ratio was 0.98. You know what that means, right? It only generated 98 cents for every dollar it paid investors. Now, that's not good. Now, it is off to a solid start in the first quarter, so if you own this one, keep an eye on that coverage ratio. You want to see it above 1 to make sure it can pay shareholders the distribution going forward. If not, that annual streak of dividend raises could be in jeopardy. All right, the last double-digit yielder we're going to look at today is Not Offshore Partners. That's not with a K, not like... Not Offshore Partners pays an 11% yield or 52 cents per share each quarter. It has paid that since 2015 and has paid a distribution since 2013. Now, the oil tanker company is based in Aberdeen, Scotland. And you know what they say? If it's no Scottish, it's crap! In the first quarter, Not Offshore reported a strong coverage ratio of 1.2, but that's down a wee bit from 1.45 for the full year 2020. A 1.2 coverage ratio is nothing to worry about, but if it keeps trending lower, it is something you'll want to be paying attention to. Now, of the three discussed today, this one is my favorite. Now, while the others might not be, crap! Not Offshore Partners is definitely the one that's strongest. So those are the three highest yielding MLPs in the market. Let me know what you think of them. And for more wealth and income building ideas all week long, check out my free e-letter, Wealthy Retirement. Just click on the link below. I'm Mark Lichtenfeld. I'll see you next week.